Okay, Ravi, my compliments on the fantastic return what you've managed to give to your, PMS unit holders. So congratulations on that. But the tough part is now. Tough part is that easy money has been made, and where do we go from here? Nifty is now nearing 10,000, and the big question mark is that has the pace of market rally this year been slightly extraordinary?
Yeah, thanks Nikunj, thanks for having me on your show. Yeah, so see, there's no taking away from the fact that the valuations are hitting on the higher side, but that does not mean that we have to crash or anything imminent that is going to happen. So why is it that valuations are high? So there was a I think the market cap of the world is at about some $76 trillion, which is about 100% of the world's GDP. That's what I had read somewhere recently. And even if you take India would be at about $2 trillion market cap, and our market cap and our GDP would be about 2.2 trillion. So we are also at about 0.9 market cap to GDP. Now, surely, if you compare this, we were at $1.6 trillion market cap only in 2008. Now 8 years, almost 7 years have passed since then. 9 years have passed since then, and still we are only at 30% higher valuation than that. So that does not tell me that this is euphoric move. Of course, and if you look at whether the participation, leverage levels, the kind of money supply that paper supply that is coming in, none of that suggests that we are in euphoric phase. Of course, there are pockets which we will discuss going further where there is a manifestation of euphoria, but I wouldn't extrapolate it to the entire market and say that okay, one should not allocate any money to the market even at this point of time.
The macro setup is near perfect. Earnings are not there, and if I look at macro, currency stable, crude prices are on our side, interest rates directionally it's going to only go lower. So why has good macro not translated into good micro?
Yeah, because those good macros have been punctuated by some real long-term changes that our society and our business environment is undergoing. I mean, whether it is demonetization or GST, these are some real long-term changes. The entire industry is undergoing a behavioral change on how you do business, and this is not an easy thing. We will come out trumps eventually, but there is a period of transition in that. So in such a scenario, definitely there will be, I mean, this particular quarter, I believe you don't know what data point will come out. You have a TV18 which reports bad ad growth. At the same time, there is a Jubilant Foods that reports 6.5% same store sales growth, or there is Lever that reports improvement in margin. So it is going to be all over the place in my opinion this quarter, and it is very difficult to pinpoint what was one time and what is a sustainable thing. So, but what I can tell you is that our path is clear. India, if I were to say anecdotally, is like a pregnant woman. We are definitely not yet in the 9th month, so we will deliver eventually, but right now we are going through labor pains.
Fair point. So let's talk about a sector where it's been good, bad, it's been sour and sweet, pharma, and I'll spend some time discussing the health of pharma sector with you. The pharma sector can also be divided. Sun Pharma is at a multi-year low, Lupin is at a multi-year low, Aurobindo Pharma and Natco are at a multi-year high.
Yeah, so let me take a step back and give you some context. So in 2009, when the market made a low, March 2009, entire pharma sector was available to you at 1 lakh crore market cap. This peaked in 2015 at closer to 9-10 lakh crore market cap, and after that we saw like a 50 to 60% drawdown. So what happened is that there were unsustainable profits, whether that those unsustainable profits were getting unrealistic multiple. So the correction was justified. I have nothing to say that no, that was not true. Competitive intensity has increased. So if you look at the trends in the sector, everything is pointing towards increasing competitive intensity. FDA wants to increase the approval cycle. they want to bring the prices lower, US government want to bring the prices lower. So everything is pointing towards competitive intensity increasing. Having said that, I still believe there are pockets that will pop up every now and then, which will allow you to make more than normal profits in this sector.
Let's talk about an example.
Yeah, so for example, there are spaces like biosimilars, oncology, inhalers. These are therapeutic areas where bulk of the opportunity is coming up ahead, and these are difficult to manufacture products, and the competition by nature will be less. It will, as compared to a oral dosage generic where there would be 10 to 15 players launching on day one, these opportunities are more likely to be 3 to 5 players launching eventually. We don't know on day one. So there is a chance for these companies to make good money in that, and we have seen some apart from that, there are some opportunities that will come up. See, finally there are limited resources. Dr. Reddy has to take a call that I am going to focus on this drug and leave this out because I believe there is going to be a lot of competition. But if enough 5 people do that, then what was presumed to be a competitive product becomes a less competitive product. We have seen an example of that happening in Lialda, or that happened in Cymbalta with Aurobindo. And now there is this new opportunity because of US FDA putting in, changing the process. So API for Renvela that Aurobindo has got an approval for is a very, very complex to manufacture product, and everybody including Torrent, Lupin, Cipla is probably facing CRL issues. Their approval cycle has been delayed by 18 months. So this has created an opportunity for Aurobindo to make money in the short run. Now whether this opportunity lasts 6 months, 12 months or 18 months is anybody's guess, but it looks like a limited competition opportunity.
So whether it is Renewal, the name which you mentioned, it's a tongue twister for me, so pardon me, or whether it is a biosimilar opportunity for Biocon, are Indian pharma companies now more like not structural bets, but you have to really rent these stocks, buy them for 6 months, 12 months, be smart. They're cyclical trades now, don't keep them and don't own them for 5, 7, 10 years?
No, I wouldn't say that. I mean, of course, you need to keep reviewing. So biosimilar is an opportunity that is going to last for 5, 7 years. Okay. And I'm been positively surprised by what is happening with Biocon's first similar, which is Herceptin biosimilar that they have filed with Mylan. The timelines got crunched. What we were expecting, something will come in FY20, is the likelihood might come in FY19, and there is a likelihood that there might be nobody else besides them. So that definitely opens up the possibility that Biocon can earn $200-300 million peak revenue out of this drug. So those are the opportunities. Now you are right to that extent that in pharma the easy money has been made. It's not like there's a big opportunity and everybody will go and benefit. The smarter players who are positioning themselves for the future, they will definitely make money.
This reminds me of what happened to the world after the dot-com crash. First everything came down and the guys who survived, they became 10x. I mean, the clear example here is Amazon. Similarly, in Indian IT sector, TCS, Infosys, Wipro, they survived, and after the 2000 meltdown, they are much stronger and better than where they were. So similar kind of a move will also happen in pharma?
So see, I'll tell you, a lot of people say that between IT and pharma, IT is a better opportunity. While I believe that IT is probably a value trap and pharma is a more clear and present opportunity.
That could be a bias also because you own pharma stocks.
No, I'll tell you why. I'll give you my rationale, and yeah, we can always disagree with that. Pharma does provide you with an opportunity to make some supernormal profits, while IT is a standard product. I mean, everybody is offering the same service. If the billing rate is $20, the other guy cannot charge $30 by any stretch of imagination. While in pharma, you can have a portfolio of products where you are competing and you are on the same level. At the same time, 1 or 2 opportunities can arise where you can make big money. Second, pharma by nature, they need to invest with 5 years point of view. To the R&D that they are doing today is they are seeding their sales for 21, 22 today. So they need to identify an opportunity, while IT has never really invested in R&D, innovating, changing the business model. Well, pharma needs to always invest and think ahead. So I think, and pharma has done a good job. If you take a look at last 3-4 years, the R&D spends have gone through the roof. They have whatever substantial gains that they made in the last 5 years, bulk of it has gone back into innovating for the future. So that is why I feel that pharma industry in general has done a way better job than IT industry of reinventing itself. We will of course go through a transition phase and not every company will be successful, but in general I believe pharma does have more opportunities than IT.
When gain is made, nobody is complaining. But my follow-up question to that is that what explains this mad rush at the subscription level, and then after this huge follow-up buying after that?
Yeah, so the way I look at this space is, first of all, I have not bought anything in IPO, so I have missed out. I couldn't make any money. But having said that, see, an HNI cannot really make too much money. The money is being made by the financer, the investment banker, and the guy who's selling the stock, whether it's promoter or private equity. The exits have been fantastic for the private equity. The good part about IPOs is that the quality of paper remains very good, whether it is DMart, BSC, CDSL, AU. I think they are solid companies and solid businesses. So it's not like you're going to lose your shirt. On the business front, on the valuation front, you can definitely have a couple of years of no return kind of a scenario or a negative return scenario from this point on. I'm not ruling that out. But why is there such a mad rush to buy this? Because there is a lack of conviction in everything else. So wherever you are able to build your conviction, everybody is rushing with liquidity towards it. You are finding a stock, a company, a good company with good fundamentals, where the near-term outlook is very good, then there is no risk of supply coming in. And if that is the case, then essentially what is happening is that you are front-ending all the returns.
But this is not a froth which you should be careful of?
No, it is a froth and you should be careful of it, but no need to extrapolate it to the entire market. You should be careful of buying these stocks unless you have a 5-year outlook.
So
or
if
maybe
Reliance
more.
Power in 2008 acted as a profit warning for the entire market, the current action in the IPO market is not a profit warning for the entire market.
Correct. Yes, I think that would be a good interpretation. This is not like the peak of 2007 boom, IPO boom, where companies with weak fundamentals were raising funds and the amount of fundraising was going, it could hit the market. So I believe these stocks can underperform for the next couple of years, but they will not impact the overall sentiment of the market.
Okay, there are 2 IPOs which I think they deserve a special mention. First is Avenue Supermart and second is AU Financials. They are both outstanding businesses. Are these outstanding price? We don't know. Like your business card, once we exchange, it says that price is what you pay, value is what you get. So these are not great stock ideas, but these are great businesses. So if you have to pick and choose between this retail behemoth versus this bank in making,
at this point of time?
At this point in time.
No. I'm not buying.
You're not buying. But on a 15% decline, 20% decline?
No, my valuation standards definitely, even at a 15-20% decline, do not make sense. Probably I need more than 30% decline and probably I need 2 years of underperformance before I start thinking again about these stocks.
So if you got a thought process that you're not inclined to buy these stocks
No, I'm
at
not
the current
inclined to
juncture.
buy, no.
Okay. You were inclined to buy into microfinance companies or the so-called quasi banks now.
Yeah. So no, just to correct, microfinance is not what excites us, but small finance bank is what. So what exactly what AU is, but AU is not a non-MFI small finance bank, while Ujjivan and Equitas are microfinance based small finance bank. So see.
So you like, let me put it this way, you like microfinance
bank.
companies which are migrating to become small finance banks.
Yes. See, I'll tell you, we actually wrote a blog about microfinance, and we kind of forewarned that there is a crisis that could come. We could not gauge when it would come, but then demonetization proved the trigger which triggered the crisis. So yeah, so microfinance is at that point of time was getting a very high multiple for a business that is prone to undergoing a crisis every 5 years. I mean, it could be 4 or it could be 6. So what you need to do is you need to factor in that every 5 years you will have a crisis which will wipe out your book anywhere between 5 and 7-8%. So if that is the case, basically you add a 1.5% cost to your credit cost to your book.
Okay.
And then if you would value it that way, then you would not have given it the valuation that you give just before demonetization. And we never know when that crisis is coming. Having said that, these are the companies that you should be buying when in crisis times. We are right in the bang in the middle of the crisis right now. If you can somehow put your finger on that this crisis is not going to last beyond 2 quarters, 4 quarters, 6 quarters. It is not going to result in credit cost more than 3, 4, 5, 6%. Then at some point these companies become a buy.
So you're buying the stress in microfinance companies which are now becoming small finance banks.
See, microfinance was a stepping stone.
Okay.
Microfinance, you cannot be a 50,000 crore microfinance company. You can be 5, 10, 15,000 crores microfinance company. So microfinance was a beautiful step that got you the scale, that got you the profits. And now you're going to use that to step into being a bank.
And that's what you want to capture.
Yeah, and these banks can capture. See, they have a advantage. They have the last mile. No other bank meets their customer once a week. That is what their unique advantage is. These microfinance companies, they have a last mile distribution which nobody else can match. So their knowledge of the client is far superior. Now once they become a bank, essentially with the same client, instead of lending 15,000, 20,000 as unsecured, they can actually graduate the client from their own database to lending 1 lakh, 2 lakh. Of course, this will still be, instead of insecure, it will be secured, but it will not be secured by probably a stream of income or something, but it will be an asset based security.
Okay, let's talk about the new themes, and that is something which I always look forward to when I interact with you. You gave us big themes last time when we interacted with you, whether that is chemicals, little bit of play on diagnostics, buy branded apparel. So let's talk about your next new theme.
Yeah, so Nikunj, it is very difficult to come up with a new theme every time, but at the same time, see, what we do is, how do you identify a theme and how do you boil down to, this is the space to bet on. So what we would like is spaces which have multiple tailwinds. So what is the reality of today? GST is the reality of today. Demonetization is the reality of today. That means the formalization of the economy is the reality of today. Yeah. Whichever industry has a large unorganized play, you will have the market share shifting to the larger organized player. That is number one. That doesn't mean that you go and buy the well-identified stocks. Then what are the other? What do you do?
How are you betting on this thing?
So what you do is, within that you identify which is, I'm referring to a recent Axis Bank strategy report which mentioned that underloved, underowned and less understood stocks. That is where the alpha generation can happen, even within those themes. Just to give an example, Kajaria is well understood. in the tiles industry and is well valued. At the same time, there would be number 3, 4, 5 player that is not well understood and has probably the same opportunity.
But which is one large unorganized sector where you think the pond size is large and where the formalization of the economy is just going to change the dynamics completely? What will be that large sector?
You know what? I mean, you need to listen to what Bhaskar Bhatt has to say. I mean, it could be Titan for all you know. 30% is what they think is the sector that will either die or become organized, and that's a huge increase in opportunity. And Titan is already a huge company; it's not a small company, but even they have such a large opportunity to take away the market share.
Okay, so your top theme would be building material and jewelry.
No. So it cuts across a lot of sectors. So I'm not able to name one particular sector, whether it is plastics, building materials, jewelry, organized retail, apparels. There are many sectors which fall under this unorganized to organized theme. But what you need to do is still zero down on one company that is less understood, now is doing the right things to ride the next trend, next wave. What is, I mean, the alpha generation in a well identified stock like Kajaria is very difficult. I mean, you can have only earnings growth over there. You cannot have multiple re-rating. But if you can find a smaller company that is now going to ride that trend, then you can probably have a earnings growth as well as the multiple re-rating.
You know, as a house, you've identified pharma right ahead of the curve. You were in some technology and IT product companies before market understood the importance of IP. You bought into MNC engineering companies in 2003 and 2004, and then you pretty much were able to ride the cycle. What could be that one big idea which our viewers, they always look forward to when they see on Market Makers, which could be called as, we'll flash it by saying Ravi Dharamshi's original idea or money making idea. We'll call it that on the show.
No. See, I really believe that these, I mean, I might be repeating myself, but these companies that are going from microfinance to being small finance bank, they have a large runway ahead of them. It's a multiplicity of theme. There's a financial inclusion theme that is playing out. See, this is an experiment that RBI has just done, and they wouldn't want it to fail. And and these are the companies that have the necessary distribution, they have the moat, and their financials are good. So I would say use this crisis period over the next 6 months to accumulate the stock with the next 5-10 year point of view, and I think there's a lot of money to be made.
Okay, so we'll quickly summarize our today's interaction. Pharma, select stocks, they still warrant a buy. IPO, avoid them like a plague. If you're chasing momentum, then don't come to Ravi Dharamshi, he does not understand momentum. Your big idea really could be buy microfinance companies which are migrating into becoming small banks, and then selectively you think you should buy into some of the companies which are part of the informal economy which can benefit because of demonetization and GST.
Yes, okay. I think you summarized it quite well. Just a word of caution from my side, I mean a disclaimer that we would have exposure to the companies that you mentioned or the sectors that you mentioned, and me or my clients, and we are likely to change, I mean we can change our view at any point of time, so just take it with a pinch of salt.
So Ravi, my trick question to you on this edition of Market Makers is Carl Icahn once said, money is made not by buying or selling, it is made by simply holding. Now if you have to gift a stock or a piece of business to your daughter on a marriage, or to your son when he is graduating out of the university, which is that one idea, one stock, one company where you would say business is great, the managers are super, and the longevity is here to stay?
So there are many businesses that face the disruption risk. So it is there are minefields out there. Taking a 10-20 year call can be very challenging. At the same, I think so things you eat, you'll need money. Those are the kind of spaces where absolute basic businesses that are not going to go away. So I would again come back to the thing that financing is a business that will stay. Doesn't mean they are not facing disruption risk. There is a technology risk over there as well. But still, I believe with a 10-year point of view, try and find a smart lender which is undergoing a crisis, which is not made out of its own actions but out of sector, and ride the wave with him for the next 10 years.
Okay. Really appreciate your time. I was looking for that kind of a pointed answer, and thank you for joining us.
Thanks so much, Nikunj. Thank you for having me.
That's it on this edition of Market Makers. Thank you for tuning in, and thank you for watching the show.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/etnow.